Hi guys, welcome back to Sphero TV. I'm Rata Akpata, your usual host with the most. So we're continuing with basic accounting for small businesses. Interpretation of financial statements. If you've actually realized, I'm doing two sets of videos. I'm doing one for personal finances, how your income, when your income is impacted, what can you do, and as well as for accounting, basically business finances as well, on how to interpret financial statements as business leaders. So the reason why I'm doing those two is that, guys, as we're a consulting, we're actually an accounting firm. Remember, we do business consultancy as well as accounting and tax advisory for small businesses, as well as personal finances for individuals as well as corporate employees. So we also do training for that. So hence the two. So we're just a business that helps you with your business finances as well as your personal finances. All right, so let's get on it. So today we're going to talk about interpretation of financial statements. We are continuing with it today. The last weeks we actually we're talking about excuse me. We're actually talking about we're interpreting the income statements as well. I talked about the margins and how to set margins for your business. I got a lot of questions about setting margins for the business because they're different. For instance, for service, how can one actually set margins for a business, for a service business, and also for a product business, to ensure that people, you actually make profits from what you're doing, and you make sure that your margins are good, and particularly with the suppliers that you're buying your products from, or you're buying whatever to help you your services from. Those are very critical for you to observe, so that you're just not running a business and you're not being profitable. Remember, with service, most of the time that people actually buying your time. Ensure that you measure that well, someone that is worth your time. And then you make sure that the energy that you put in, the work that you put in, the research that you put in, the margins that you end up charging your customers are actually worth it in the end. It's important that you make a profit from whatever that you are selling. All right. Just a disclaimer before we continue with this show. Remember that this is just basic accounting for business leaders. It is nothing too technical. Accounting is extremely technical. I would advise you as a business owner to ensure that you hire a professional accountant to do the books for you. This information that we're sharing today, it is not sufficient for you to even try and draw up any financial statements for yourself, or try and draw up books for yourself. All right, let us continue. Interpretation of financial statements for business leaders. Today we're going to be interpreting cash flow statements, also known as statement of cash flows, right? Now, when you actually look at the financials, or the financial statements, so the very first thing, the pages as they come in, when you go deeper, sometimes the very first thing that will come are the notes, the financial statements notes. We'll get into that lastly, because those are done right after. As much as they're normally on the first page, they're done right after we've actually done all the steps, right? So right after the income statement should be the cash flow statement, or the statement of cash flows. Now, what is a cash flow statement? The cash flow statement is just basically now as realizing the cash that you actually used for the business and the cash that you've actually received for the business between the period of the previous financial year and this particular that particular current financial year that you are actually being presented with. So that is basically it. Because the reason why the income statement doesn't show that is that income statement most of the time is done on accrual accounting basis. What that means is that we record transactions even if you haven't received the money or not, even if you've paid your suppliers or not, right? For instance, you will be invoicing your customers. Let's say you have it in August 2020, August 2020 invoice that you've invoiced your customers. If you have not received the money in August, then you're going to receive the money in October or September 2020. We are going to record that invoice as the revenue that you've received, right? And then and also for suppliers as well, when you actually have suppliers normally on credit basis, where they give you whatever service that you've given them, that they have given you, or whatever products that they have given you. It will actually then mean that you can actually pay them much later, but we are going to record those invoices on that particular month that you've received the invoice, whether you have paid them or not. So now the cash flow statement now will come in and now interpret that for you and say, okay, this is the money you've actually received and this is the money you have actually spent. All right, so today I'm going to just discuss for you the different structures and what does it mean within the cash flow statement. Now the cash flow statement is structured this way. It's structured in different sections. All right, now the very first section that you'll see on the cash flow statement is cash flow from operating activities, and there will be another section and another section. I'll be explaining them as we go. Now, what is cash flow from operating activities or cash flow from operations? That's basically money going in and out, the exact money going in and out of the business in regards to operations of the business, right? So under operating activity under operating activities, cash flow operating activities, you will see the profit that will be recorded there from the income statement. You will also see depreciation, and that will be also recorded under there. What you will also see there, you will see where they say you will see where it is written cash flow from accounts payables or cash flow from accounts receivables. What does that mean? What is accounts receivables and what is accounts payables? Accounts receivables is just your debtors. Your debtors are your customers on credit, right? The ones that will pay you much later. You invoice them now, then they pay you much later. Those are accounts receivables. What are accounts payables? Accounts payables are your suppliers on credit, right? Now these suppliers, you will have received services or products from them and then you pay them later. Accounts payable are your suppliers and accounts receivables are your customers. All right, so what will be showing there under cash flow of operating activities under the cash flow statement will be showing the actual money that you've actually received from your customers under accounts receivables, right, from the previous period. Compared it to the current period. How have the accounts receivables actually moved? So what this shows is just shows your collections, right? Is your lady or your gentleman that is actually collecting, or the collections department, is it doing their job right? You need to be able to look at that and ask your accountant, okay, collection seems low this year. What does it mean? Or it seems high this year. So you need to be able to discuss that with your accountant, and your accountant will tell you it just looks like compared to last year, seems like collections has gone low this year. We haven't collected as much money as we should have this year, and it's still high. Particularly the accounts receivables are still high. We're not collecting money. Basically, we're invoicing, but we're not receiving the money into the business. What could be the various problems? These are the things that you discuss with your accountant. You ask your accountant, so what could cause that collections is so low, and maybe you actually have a collections person in-house, or your accountant is supposed to be the one that is collecting for you. Then you can discuss with your accountant, all right, now these are the problems that we were incurring, or these are the problems that we were facing. Those are the things that you need to be able to discuss, and the accountant should also be able to say to you, I don't know if your collections person is actually doing the job well, or maybe customers are just giving a problem with paying. And what is causing that problem with paying? Could it be your customer service? Could it be that maybe the customers are having cash flow problems, they just need to be followed more, or whatever the issues are? Those are the issues that you discuss with your accountant, and the accountant should be able to advise you on how to do better going forward, because if the collections are not good, it affects the business negatively. Now on the accounts payables as well, you need to be able to see the difference between last year and this year. That, okay, how have I actually done last year, let's say the previous financial year and the current financial year? You need to be able to say, okay, we have paid our suppliers well, or we haven't paid our suppliers well. Whichever way it is, discuss it with your accountant. What does this mean? Why are we not paying our customers? Do you know what? Maybe the issue was that you didn't send them a PO. No, not them. They didn't send you a purchase order, or I don't know, whatever problems they may be, or maybe you are having cash flow problems, or maybe you're not asking for statements from your supplier. Whatever issues that are there, you should be able to discuss them with your accountant and find the best solutions to have better accounts receivables and better accounts payables, right? Yeah, those are the questions you would probably ask your accountant under cash flow under operating activities, right? That's the first section that you will see under the statement of cash flow. The next section on the statement of cash flow, you should be able to see cash flow from investing activities. What does that mean by cash flow from investing activities? Normally this will be cash that you will probably have bought long-term assets, such as I don't know, assets such as your equipment. It really depends on what type of business it is. Your equipment, maybe you've bought land, maybe you've bought a car, or whatever. Those big assets that you've actually bought for the business, that is cash flow from investing activities. Basically, you are actually investing within the business. And it will also happen that sometimes as a business we actually sell our assets, right? And as a business leader, you need to be able to observe, and why did you sell that asset? Did it depreciate and then you needed to dispose it, or you actually needed to sell it as well to invest back into the business? Because that also looks good if you want to maybe have an investor come in. Those are the places. Go to the investor. Most of the time they also look at your cash flow. Or okay, how's your cash flow statement looking? How are you using your money? Are you collecting? And as well as they will also look at you, are you investing into the business by buying assets for the business? Those are the things that are very, very, very critical for you as a business leader, and you need to be able to have this conversation with your accountant and say, okay, we have bought these assets and this is the value of the assets, and this is the cash that we have actually spent from the business, for the business and for the assets. So this is actually falling under the cash flow for investing activities. And then the next part will be cash flow for financing activities. What will this mean? This means probably cash flow from you paying your dividends. This will be this is basically equity and equity and what and debt, basically debt and equity transactions. This will be the ones coming from cash flow from financing activities. So equity would mean, for instance, now you need to pay out your dividends, so you will actually see the actual money that has actually gone out to pay your shareholders, right? And also what would happen as well under this particular section of the cash flow would be the long-term loans that you've actually had. How have you actually, the actual money that you've actually paid those long-term loans, right? As well as maybe as a business you also maybe loaned out some money, and the returns that you actually got for loaning out that money will also be recorded under this section, which is under cash flow from financing activities, right? Sometimes within the cash flow statement it will actually show whether you're actually doing well or not as a business. Is your cash flow okay as a business? This is where now it'll show, because after all the transactions and after all the sections, at the end of the day, that balance at the end should be exactly the bank balance at the end of the period. So it actually shows the cash you've actually spent in the business. Everything that is happening in the business is showing in there, and at the end of the day you should have the bank balance actually match the closing bank balance should actually match the cash flow statement closing at the end of the day. So it actually shows exactly what you're spending your money on, right? So if the business is not doing well cash flow wise, you need to be able to interpret and actually come up with solutions with your accountant on what can we do to make sure that our business does well. Maybe find a way of increasing our income, find ways of cutting down our costs, because your cash flow will show you where the problems are and why cash is maybe going out more than it's coming in, etc. This is where you will see maybe you shouldn't have paid dividends, maybe you should have collected more. It's different scenarios that you will actually see within the cash flow statement that will show you what decisions you need to make sure that the cash flow of the business is doing well. I hope this was a very helpful episode. I tried to make it as simple as possible, but remember, this is very technical. It's super important that you involve your accountant when you're doing these books, and the accountant should be able to interpret it for you. What I was doing for you is for you to understand the basics of how this cash flow statement is actually structured, and you should be able to understand, well, okay, here this is what is happening, and then ask your accountant, well, okay, now we have paid our dividends this much. Should we have paid them? Okay, we have paid our loan. Should we have paid it this much? It's affecting us. All those discussions can be had with your accountant, and your accountant should be able to guide you on what to do to improve the cash flow status of your business. All right. I hope this was a helpful one. DM me for any questions. We are an accounting firm that you can contact for us to help you with your accounting and help you with doing better. It's super important, remember, to have an accountant for your business so that you can see whether even your business is even worth running in the first place. All right, then, you should have a lovely weekend, and bye for now.